Welcome back to Global Lens. The Trump administration is adamant that it will stick to August 1st deadline to impose the trade tariffs on America's trading partners with or without a deal. But the questions remain, will US President Donald Trump extend the deadline yet again? But if he does, how is the market preparing to react this time around? Report suggests markets which initially developed a narrative, Trump always chickens out, can now see through Trump's trade policy, a policy that includes setting tariff levels and then engaging with nations to revise those levels. In Trump's words, it's not chickening out, but negotiation. The situation has started to mildly straighten out for Trump. For instance, the customs duty data, which in a way reinforces Trump's policies. In June, the US customs duty collection has surged as these tariffs gain steam, topping $100 billion for the first time during a fiscal year and helping to produce a surprising $27 billion budget surplus for the month. However, the challenge with regards to reaching an agreement with major trading nations continues to loom. There are some nations like Canada, Brazil, Mexico, EU that are unhappy with the imposed tariffs and have even threatened to retaliate. To understand how Trump's policies are playing out and if these threats are losing their efficacy with countries considering retaliation, we're now joined by Professor Christos Cabolis, Chief Economist at IMD World Competitiveness Center. Professor Christos, thank you very much for joining us. Let me begin by asking you, do you think Donald Trump's tariff threats are now seeing diminishing returns?
Thank you for the invitation, and it's a pleasure for me to join you and your audience. In some ways, I think that the tariff threats have lost the shock value that they used to have. But that does not mean that the threats do not matter anymore. On the contrary, what they do is they bring a certain amount of disruption and instability that essentially creates a lot of commotion in the markets. The markets may not go up and down, but the trust in the stability of the trade system is affected. Within a very short period of time, in April, we went from an average tariff on US imports from 2% in up to over 20% in just a couple of weeks. So this creates a lot of issues. Countries do not know what exactly is going to happen. As you said in your comments, companies do not perform long-term plans. They pause on capital investments, and particularly in manufacturing and in logistics.
Right. The European Union has threatened retaliation with $84 billion worth of goods with the US. How do you think this will hit the United States? And do you think the European Union will go through with this threat?
This is a very delicate point and a very good question. And I wish I knew the answer. But essentially what is happening is that the EU-US trade relationship is the largest globally, both in terms of trade of goods, in terms of trade of services, something that we don't mention that much, and FDI on both sides. So we've noticed that there was a pause until August 1st. The European Union was claiming that we'll start the retaliation this past Tuesday. In fact, they stopped that as well. So in some respect is wait and see. There are different issues that are in place. If Trump, for instance, imposes a blanket tariff, then the EU has said that they can retaliate, and they can retaliate in terms of regulatory actions, not only tariffs, tech, green energy, data privacy, and so on and so forth. So I think in some respect, there will be a little bit of a tryout to see where exactly and what exactly is going to happen. However, the biggest cost, I don't think that it's a higher prices because of the tariffs. It is the strategic dislocation. It is the losing of efficiency, the losing of trust in the transatlantic partnership. And without stable rules, everyone hedges. And in that respect, everyone loses.
Right. I would also like to ask you about how do you think the Chinese economy is going to benefit as a result of these tariff wars? Do you expect Europe to start coming closer to China? Is the Chinese economy going to benefit with more countries seeing possibly the Chinese economy, the Chinese government more dependable, more predictable compared to what's happening in the US?
This is very possible. In fact, what we saw from the very start, from the President Trump's tenure, the second time, is that China was much more prepared than any other country. Um, China grew in the second quarter by 5.2%, the GDP. And analysts think that this may slow down, but nevertheless, and that this was because of the front loading of the exporters to us. However, at the same time, as you very um, shrewdly said, China has tried to create a feedback loop. It tried to build on self-sufficiency in areas that it didn't have before, like semiconductors, AI, energy. It has invested heavily in Belt and Road markets, creating alternative export channels. And these essentially may help to weather out the tariffs by United States. Having said that, essentially, um, the action of China results in a reaction. They move closer to a reaction from the United States and the European Union that move away from China because China holds back and closer to other places. In that respect, I think that China and the European Union may find themselves closer. There is a very high possibility for that. Yes.
Right. The impact on India. How do you think India stands to benefit as a result of these changing trade partnerships, the very dynamic trade situation and tariff situation we're looking at?
Indeed. So India has a lot to gain and a lot to lose depending on how the relationship with the United States is going to be built in a couple of weeks. Because they're facing several sectors from which are very important. The Indian economy are facing hikes from 10% to 26% August 1st. So on the other hand, though, so this can harm the industries of India. However, on the other side, India has many different options. If I remember correctly, in 22 out of 30 key US import sectors, India has a strong competitive position. And in addition to that, India has a very large market, which can help a lot, and has a real opportunity to, as with China, to deepen trade and regulatory ties with the European Union. So depending on whether United States materialize the threats, the tariffs, I think that EU may allow India to stay globally a very important power.
Right. Thank you so much, sir, for joining us. And my final question to you would be, how do you think the European economy is going to be impacted by the end of the year in terms of slowing growth? We have seen the rearmament of Europe. United States had made it very clear that Europe and many other countries have treated US very badly over the years. Now Europe is on its own. How are we going to see Europe's economy shaping up by the end of Donald Trump's term 3 years later?
It really depends on whether European Union will succeed to integrate. We are discussing about Europe as being a one economy, but in reality, we have many important economies that need to integrate certain aspects. They need to integrate, for instance, the capital markets. They need to integrate the fiscal policies, and they need to integrate the strategy towards self-defense, whatever the issues related with defense are. So Europe moves slowly towards that direction. But I think the sooner these integrations take place and the sooner the European countries align towards some important elements, the better the position will be in the end of President Trump's tenure.
Okay, thank you so much, Professor Christos Cabolis, for joining us with that interesting perspective. Clearly, the world is going through a lot of uncertainty, and it's going to impact investments, and it will lead to slow growth over the next few months. Let's hope that all these tariff threats and trade tensions finally settle down somewhere. Let's move on and get your